Want to know what's going on in the Toronto real estate market December 2023? Let's get to it. Alright guys, today we're going to talk about the Toronto Real Estate Board stats. It just came out a couple days ago. Let's put up our dot graph so we see where we're at. Alright guys, so here's our dot graph. We're actually tracking average prices every single month since August 2019. So obviously we've had many ups and downs. Since 2019, we had a big run up to February 2022. Since then, we've kind of fluctuated quite a bit because of interest rates. Right now, we're in the winter months, so typically we do have a drop in sales, a drop in average price. And right now we're seeing that since August, we had an increase from August to September, a little bit of an increase from September to October, and from October to November, we have quite a dip. We're kind of in line here with the numbers that we saw back in August. And that's what we're seeing right now in our dot graph. So as you see, based on our dot graph, we've had a lot of price fluctuations over the last few months, and this is directly related to interest rate changes that we've had over this last year. And now we're actually seeing the impact of those heightened interest rates because we're seeing a lot more inventory in the marketplace and we're seeing a lot less sales. So in our next section here, we're going to look at month-to-month changes, and you're going to see that based on our month of inventory, we're definitely creeping into a balanced market in a lot of our different property types, and it's definitely impacting our average price as well, as it has been coming down quite a bit month over month in the last little while. All right, let's check that out. Okay guys, so we're taking a look at our month-to-month numbers here. Let's have a quick look. We're looking at November. So detached homes had a total sales of 1,881, which is actually a dip of 12% from last month. Our average price here is 1,403,500. And as you see here, that's actually a dip of 3% from last month. Semi-detaches, we've had 404 sales, which is a drop of about 5% on sales month over month, and our average price is at 1,060,829, which is a drop of about 3.8%. Townhomes, we've had 696 sales, average price of 885,818, which is a drop of 4.7%, so about 5% there, and about 4% as well, a drop in sales. Condos, we have 1,212 total sales, which is a drop of about 7%, guys, and kind of odd. And our average price here at 710,501 is actually up 0.25% from last month. That's kind of surprising. But the story here, though, is our months of inventory, and this is just the relationship between active inventory and our total sales, and that actually gives us an idea of what type of market we're in. Let me take a look at our months of inventory guide here. So we're in a seller's market for between 1 to 3 months of inventory, a balanced market between 4 to 6, and we're in a buyer's market if we're over 6 months of inventory. So detached homes, you see here, we're at 3.63. We're just kind of entering that balanced market. So yeah, semi-detaches are at 2 months of inventory, which is technically a seller's market, but just depends on the market you're in. Townhomes, we're at 3.49 months of inventory, and condos are at 5 months of inventory. Condos are well within that balanced market, and this is for sure true. There's a lot of condo options in the marketplace right now. If you want a deal, you're going to find them in the condo market. However, there are kind of deals in all these different property types. It just depends on where. The nicer properties are still kind of moving, but those rundown kind of fixer-upper properties are the ones that are sitting on the marketplace. And in all honesty, guys, those are the properties that I love. I really prefer to buy a fixer-upper property, put in the money myself to make it look a little nicer. Give me some time, a few months down the line here when the interest rate starts cutting, and guess what? That property is gonna just fly. You know, it's gonna go up in value because I put some sweat equity in it. I bought it for a cheaper price. I put in the work, and then later on, when interest rates do fall, which is predicted to happen in maybe the second, third, or fourth quarter of 2024, then we're gonna have a resurgence of buyers because there's some pent-up demand out there. But this is what's going on in month-to-month changes. So yeah, guys, the story of the moment right now is the fact that we have low sales and we have high inventory, and for that reason, the prices are going down, and properties are sitting on the market a lot longer as well. So buyers do have options. You saw there that the condos in particular are in a balanced market now based on the months of inventory number I showed you, and that means that there's a lot of options on the marketplace. And if you're looking into that entry-level property, which is still a condo, maybe even high 400,000 right now, depending on what city you're in. You know, maybe in Durham, maybe in Peel region, you can get something under 500,000. In the city of Toronto, you can still get something entry-level at around 500,000. And guess what? That didn't exist even just a year ago. Okay, so those are options that are available for you. I'm going to show you another screen here, which kind of gives you an idea, and not gives you an idea, but it shows you historical sales in November and kind of demonstrate how we're at like 50% of sales here, and that's pretty crazy. So let's have a look at that. So here, this is what I wanted to show you guys. So we're in the month of November. Let's take a look because we're looking at historical number of sales here. In 2023, we had 4,236 sales. Last year, we had about the same, but years past, you know, we've had over 8,000 sales, 7,000 sales, 6,000 sales. On average, we're around that 7 to 8,000 sales. That's like a regular number in the month of November and many other months of the year as well. We're like at 50% of that. And not just that, we have 16,000 active listings in the marketplace right now. 16,000. Last year, we only had 11. The year before, we only had 6,000. Okay, and if you look back, only back in 2018, we were in a market then where actually prices were coming down and there was a lot of inventory as well at the time. We're matching up with 2018 level of active listings at the moment. And if you look over here at months of inventory, we're at 3.96, and that doesn't even exist since 2018. So it's been such a long time since that's happened, guys. Crazy. So yes, it's obviously evident that interest rates are impacting buyer confidence and consumer behavior. We're in the early stages of December here. We're December 5th, actually, is the recording of this video. Tomorrow, we're going to have an interest rate decision by the Bank of Canada. Most likely it's going to be no change, and so likely nothing is going to change in our marketplace in the short term. We're probably going to be at this level and at this type of volume for the next little while. We do have some news reports that are claiming that interest rates could drop as early as the springtime. Obviously spring, we're in that March, April, May months. We're gonna see if that's the case, and that could actually impact buyer behavior. It could boost consumer confidence, and it could bring those pent-up buyers back into the marketplace. We're gonna have to see, but I think over these next few months, we're probably still gonna have a low amount of sales. Inventory is probably still gonna be high. We might be in that balanced market range. In my opinion, if you're a buyer and just gotta do the math, we gotta go to a mortgage broker. You lose nothing by going to a mortgage broker and figuring out what your pre-approval is, what that monthly payment is gonna look like. If you're able to get into a property today at the prices that we're seeing today, I think that in the long run, you're gonna benefit from buying at a lower price. And if you're able to manage those payments, when we get refinanced in 2-3 years, we're gonna have a lower payment and you're gonna have a property that's gonna be worth a lot more than it is today. That's my guess, guys. That's just my feeling. You know, let me know if you think differently in the comments below, but that's pretty much what we're seeing at the moment. Let's take a look at our year-over-year changes. You know, like I just showed you in the previous slide here, we're almost on par with the number of sales that we had from last year, 4,236 compared to 4,507. Average price, we're actually a little bit higher than last year, believe it or not. We're at 1,082,179, which is slightly higher from last year. Very, very minimal change here, but it is slightly higher. Yeah, so let's take a look at that year-over-year summary here. We are seeing that our sales dropped about 6%. New listings are up 16%. Active listings are shooting up 40%. And our average price is up 0.3%, guys. It's pretty insignificant, I would say. The days on the market at 25. And then also the 39 is like when somebody delists and then relists on the marketplace. So there's a lot of people who are on the marketplace for maybe a month. Then they remove their listing and relist that same property possibly at a different price point. We're up to about 40 days on the market here, and that's what I'm seeing. I think a lot of properties are sitting on the market about 30 days. Some nice ones are selling a little bit sooner, but I'm seeing sales actually happening a lot longer than they usually do here in our marketplace. And yeah, look, the numbers are showing you the same here. So that's what's going on year over year. So what's my message to the buyers in this marketplace? If you're able to put 20% down and you're able to manage those monthly payments with these higher interest rates, we got to go to a mortgage broker to see what that approval looks like, what that monthly commitment looks like. And we can do all that math before you even make a commitment on a purchase. But if you're able to handle those monthly payments at the moment, this could be a good opportunity for you to get into a better price point. We obviously saw in the previous sections of this video that we have our month of inventory is in a balanced market for many of the different property types. And our price point has actually calmed down quite a bit. There's a lot of inventory out there. And there are deals out there if you guys want to know about that. You know, comment deals below and I see if I can get you a list of condo deals, detached deals, semi-detached deals, whatever you guys are looking for, it does exist. And if you have the guts to get into our marketplace and pay a little bit higher than you're used to, just for this next maybe couple of years, you can get into a better price point. And me personally, I prefer to get into a lower price point and manage a higher payment for a little while versus having a lower interest rate and buying at a high price. That's what happened back in, February 2022. Interest rates were super low. People were getting, 2% interest rates, but they were paying through the roof for their prices for those properties. And now, the property price is much lower. I mean, look, if you were to flip that and now we have a higher interest rate and a lower price point, I would much rather get into the lower price, but as long as I can manage those monthly payments. In about 2 years, when you do that refinance, most people are getting into maybe a 2 or 3 year rate, whether it be fixed or variable. You're going to see that the payment is actually going to be a lot lower. And when that happens, when that interest rate drops, guess what? Buyers are going to flood back into the marketplace, and that same property that you would be purchasing in the next couple months here is going to be way higher in price. that's what's going to happen, okay? When it comes to the sellers, it's a bit tough, and we do not have a crystal ball. I know there's some news articles saying that interest rates could drop as soon as spring, but waiting until the spring could be you shooting yourself in the foot. Why? Because that might not happen, and if it doesn't, that means that we may have a longer period of time of prices still dwindling down, and that also means that if you were to sell it today, probably you'll get a higher price today than you would in the next couple of months. So depending on your situation, guys, you might consider thinking about putting the property up in the market. Now, if you're an investor and you're struggling right now because the cash flow is negative, you have 2-3 properties, and your investment properties are now negative cash flow, you're paying an extra $1,000 each and you cannot handle the payments, guys, do not bleed out. Let's put the property on the marketplace, cut our losses here, at least sell with a profit. Don't get too caught up with the fact that you could have sold it last year for a lot more. You just got to cut the fat here at this point, I think. And, we can help you with that, right? We've had several sellers, whether you look at it as unfortunately or fortunately, over the last few months that were able to sell their property. They still were able to get a profit of that sale because they owned it for a little while. And guess what? Now they feel a little bit of a relief on a monthly basis because they're not dealing with those payments, and it is what it is. Next time when you get into an investment, you got to think about different strategies. I'm not really a big fan of condos for an investment, especially now that Airbnb is being regulated on a federal level. You can't even claim your expenses against your income anymore, at least as of, I believe, the beginning of next year. And there's a lot of restrictions here in the Toronto area. I mean, you're at negative cash flow anyways with condos right now, and it's hurting a lot more than normal for a lot of people. I am more of a multifamily person. I would prefer to go into, in the city of Toronto, a semi-detached or a detached home that you're able to split into 3 to maybe even 4 or 5 units, depending on the lot that you have, or cities around the GTA, which also allow for you to have at least a main floor unit, basement unit, and maybe even a garden suite in your backyard, depending on your lot size. Guess what? People who have those type of properties today are still cash flowing. My properties that I have are actually still cash flowing, even though my interest rate is variable and it went up quite a bit. Like, I'm almost at 7% on some of these. I'm still cash flow positive, guys, because I was making $1,500 before. Now I'm only making $300. I'm still positive though, because I have those units. I'm able to kind of generate larger income than I would on a condo. And so, that's what I would say, guys. And if you have any questions about that from the investor perspective, let me know, guys. This is the video for today. Hopefully you learned a little bit of something in terms of what's going on in the marketplace. And if you have any questions at all, DM below, contact info below, set up a call with us, and we'll hook you up so that you're not losing in this marketplace. There are opportunities out here, guys. You just need to know what to do. And guess what? Like, we're in this. We do this every single month, well, at least this video, and we're real estate every single day. We have a team that can help you with purchasing property and also setting up the best strategy to sell your home as well. Talk to you soon, guys. Take care.